Hello and welcome again at Stocks Advisor channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. In today's episode we'll speak about Trillium Therapeutics, traded at Nasdaq, ticker name TRIL. Well, Trillium Therapeutics did end today at 15.32 about, and now actually we see that the latter candle is a red, very bearish candle, so it's a red candle with very high upward shadow and a bit lower downward shadow, meaning that it's more actually a bearish mover rather than of course bullish. It's not about speaking about this, so it's really bearish. And now we are sitting at the previous support line that was formed in September, and actually this is the level of about 1530, and also exactly coincides here with moving average 50, which is the blue line. By the way, we have here as always in our daily charts three moving averages. It's moving average 20, 50 and 200. Here on the left you see their depictions. These are green, blue and red lines correspondingly. So we see that today's action started higher at 16, but we tried to pierce moving average 50, the blue line, then returned and also tried to return higher to the previous volatility line and pierce upwards moving average 20. Also didn't work, so it's a classical situation of being actually stuck at between moving average 50 and 20 here. So we see that this line, we wanted to return to the previous volatility level, also didn't work, the level V1. And now we are sitting between these two with more bearish indication here. And this is a classical situation in the sense that we often see this kind of trapping between two elevating moving averages 20 and 50 while they are decelerating. Now we will speak about what does it mean. Usually this is more like bearish and expectation for next, let's say, decline, and the deeper support is needed here. So what do we see? First of all, what happened here? We started by the beginning of November the classical upwards wave, and this wave actually went all the way until let's say the level of V1 here, did volatile and didn't make some last move, going RSI very overbought. Then it returned to V1 and then broke. It's almost head and shoulders, not completely formed the second shoulder here, but it's, and then we see this rebounds today trying to return, but didn't confirm it, so it's declining. And in that sense, it's, let's say, also incomplete head and shoulders, so kind of a bearish situation here. What in general does it mean? So first of all, RSI is strongly declining. We can see it, and it's going downwards with acceleration, so it's going like this. Its second derivative is negative, really going fast downwards. MACD wise, we did cross the negative zone and looks like starting to develop a negative wave, meaning that until we bottom it, the decline should continue. Like examples previously, you see when we bottom it, usually this means the decline is finished. Here the same, when we bottom, usually this means the decline is finishing. If you see examples of October and September, similar situation now here. We need to wait until we bottom, so decline will continue most probably here. And the second important parameter is here is a trapping of the candle or price action between two decelerating moving averages. What does it mean? So first of all, let's draw it here and a little bit left center. We see moving average 20 going green line. It's going like this. What does it mean? It's still slightly pointing up here, not completely flattened on the chart, but it's decelerating, meaning it's bending. So its second derivative is smaller than zero, meaning it's decelerating and preparing actually to go down, to really go down. The same is true for moving average 50. It's also going like this. It's also decelerating. And usually what happens here, if your price action coming from this side traps in between, it starts bouncing here and starts bouncing, and with two moving averages turning downwards, the price action also turned downwards even faster than the moving averages usually turn. It's usually a situation of trapping of the price, and then certain moment it really breaks down and then moving averages tries to capture it, and when they capture it, then it actually reverses. That's kind of situation we can see here. The only thing that usually can break this scenario is the news, is a catalyst, and we know this is a therapeutics company, so most probably the catalyst, if comes, might come and be very, let's say, fast moving. That is the case for therapeutics. And also never forget about FDA. It's usually a kiss or kill news, and when this comes, actually no technicality means anymore. That's the classical for therapeutics. So you should always keep this in mind and remember this, and never ask something like, oh, we have an analysis, or I had an expectation, and then news came, it went other way around. Yes, that's what that happens. This is the known trick, known risk for therapeutics. It's a known kind of casino component, if you want to call it like that, but that's true. So coming back to TRIL, what we see here, it's about to pierce further, most probably, because we see the dropping of the price. Still, we might bounce here a little bit, but in general, that's the action expected. And with this being expected, only we can do is start actually to buy down and average down, hoping to catch so-called falling knife. And usually it's tricky to do it, but if you know the levels, you know how to play, you can do it. So let's draw the support levels here. Let's quickly do it. So this is the one very strong support line. There is another one, a weaker volatility level here at 13. And then if we think of going lower, actually, there is another volatility kind of support level here, and then a stronger one is actually here, just sitting together at moving average 200. And then of course the last one probably that will be playing here is this one. Too many, but also the decline could be very high. We don't need to forget here that the price from August really ran from actually 6 to all the way to 21 almost, so it's really huge growth, so we should be prepared for some serious declines. And with this having said, what we can expect here, first of all, now let's name the lines. So S1, S2, 3, S4, S5, and then S6. And as always, we do the most safest average down approach. So it doesn't mean that all levels should be reached, but as always, as we do it. So the first entry opportunity here would be most probably between S2 and S3, because this is the nearest point where you can think technically the decline can be stopped. And then if this would continue, actually it might really break down and go only till the moving average 200 can stop it. So it's between S4 and S5 would be another average down opportunity. And again, should this be pierced, then you can start buying from S4, S6 and below. And actually this would be until the level of 7 you can call, because there is another final, well, let's say another support level here, just exactly at these levels. So these would be the entry opportunities here, and average down. And again, it's advised to buy with 1-2-2 approach, meaning that you split your funds you would like to play here in 5, and then you do the first buy with 1, then average down with 2, and again average down with 2 portions according to the analysis given here. This way, that's the most, it will be the best optimization for profit versus possible losses. And actually, it's advised once you enter and it returns, the price spikes back, just sell at 10% profit from any level independently you sell. You start growing up and usually sell at the nearest appropriate support line, because the price action could be very different here. Still unclear what channel will be formed, because we can clearly see the reason, one of the reasons, actually the technical reasons, let's call it that way, of prices here is clearly the upwards, the top of the upwards channel formed, and we see there was another one actually. If you would continue the price going like this, we also sit on it today. So these two, R1 and R2, are actually about to be pierced. And once the moving averages start to decline, we actually will form some new channel, and we will need to see what channel it would be. So for the moment, this was narrowing down, flagging, and yeah, we will see how it goes. So that's all for TRIL for the moment. Be careful with it. It's more to watch and enter if opportunity comes. If not, Well, it's okay. It's better lose an opportunity than the money. So please then watch other videos from our channel. Maybe their situation will be interesting, so you can enter and plus your, let's say, alerts, enter the position, make the profit. This way, please don't forget to subscribe to our channel if you didn't do so already. Also press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.